As with any of these assignments, I want to make sure that we at least go through the process of understanding how to and what variables we're looking for in these stock option contracts. And in this particular case, we're also going to weave in our understanding of what they have previously disclosed. So we always want to find, always want to be looking at who's the individual or individuals that are getting these stock options and how many options that are being granted. So what are the total number of shares that are granted in this option contract? What's the type of the option? In this case, it's an incentive stock option. What's the exercise price per share? And in this particular case, it doesn't give you an exercise price per share because they don't know what the exercise price per share is going to be. At this moment in time, all they can tell you is whatever the market value is going to be at December 31st, 2020. The grant date is also the same date, December 31st, 2020. So the exercise price and the stock price at the date of grant are going to be identical. And the vesting begins the next day on January 1st. Then we want to look at what's our vesting schedule. How many of these options vest? Do they all vest at once or do they vest in smaller chunks? So we want to look at the vesting schedule. And we also want to look at the termination period and the term of the award or the expiration date. In this case, it's 8 years, expires December 31, 2028. So all these are going to be very important variables as we move forward. Now, there's a lot of other information in the option, when they get to exercise it, etc., etc. And so some of this information may be useful, most of it's not, but it's something that you should at least take a look at when you are trying to advise your client and when you're trying to also advise your client's employees. Because this is not just about writing the option. There may be cases where if you're a tax professional, you may need to also help the employees that are getting these options, and how are these taxable to them, or are they not taxable to them? So there's all sorts of interesting information that's sitting in these options, but I think most of the data that you're really going to need is right up front here, as far as these main terms of the option contract. Now, I also want to point out that the financial statements of the company are also very interesting. And footnote number 15 around stock-based compensation just kind of lets you know what's going on. In fact, they use the Black-Scholes model, as you can see down here. They've got their calculations of volatility, their expected term, their risk-free rate of return in each one of these years, their dividend yield, and what they believe the forfeiture rate is going to be. So these are all going to be interesting variables as you're giving advice. We've got enough historical data here to make a determination. But if we just go back up to our basic financial statements and start looking at some of the items that show up, and we're looking here at the statement of changes in consolidated statements of equity, and we look at stock-based compensation has its own line right here in additional paid-in capital. If you recall, when we were booking stock-based compensation, the credit was always to additional paid-in capital. Now, we may have put on a separate little couple of words that said stock options or restricted stock awards or restricted stock units, but stock-based compensation was definitely going to additional paid-in capital. And you can also see we've got exercise of options here. So this is the number of shares that got issued or exercised during this particular year. And this is the amount of cash that they collected for the exercise of those options. So here it doesn't look like they got a tremendous amount of additional paid-in capital or additional amount of dollars coming in for these restricted stock units, restricted stock awards, or performance stock units is what they also have. We're not looking at the RSUs or the PSUs, we're really looking at the stock options. But I've given you this set of financial statements so you can take a look And you can always ask Dan, maybe he was the signing partner for this particular organization, since it is based in Massachusetts. Maybe he knows. Maybe he doesn't. But I thought I would at least give you some financial statements, a actual stock option contract, and have you go through the process of determining what is going to be the compensation expense. When does the compensation expense get recognized? Do I have to build it in forfeitures? Everything. So good luck with this assignment. And make sure you're using the Black-Scholes model. Look at the videos that I did for both calculating volatility for Tesla, and look at that classroom video that we did when we were calculating volatility for that other company we worked on.